Hello, and welcome to Real Property Pros and Cons episode 21, which will apparently be a much shorter episode because I had so many technical difficulties to get the show started today. So we'll still have a show. It will be there. My guest will be here. And you know what? Life goes on. And that is the beauty and fun of live TV. So, I was talking to one of my friends yesterday who kind of said a whole bunch of interesting stuff, which was, I have a decent income, I make a decent amount of money, I, am a good person, and yet I really don't know if I can afford to buy a house. Um, which kind of makes sense in a place like San Diego, because the median home price in San Diego, as of earlier this week, it actually was down from the height of the pandemic, but it was still almost $800,000, which means who can really afford $800,000 to buy a house now as like the median home price? That means like there's as much stuff that's less than 800,000 as there is stuff that's more than 800,000. But when you think about a median price of 800,000, that really means you're kind of like basic single family home that white picket fence, 3 bedrooms, 2 baths, whatever sort of standard house is $800,000 in San Diego, which is a lot of money when you think about that. So I thought, what better person to come than another lender, who is one of my friends, who can talk about first-time homebuyer programs and different things that are available to people who want to buy houses but fit in kind of the middle class, and don't necessarily have the funds to put down a down payment. And also I think that our guest can talk to us a little bit about ways of saving money and ways that you might be able to actually achieve the American dream, which a lot of people say is owning a house. So we will be right back after I have this really brief, quick message. All right, hello, and Lori, now you are on camera. I am here with Lori Goldman, who is a loan officer. She works for Movement Mortgage and has been in the mortgage industry for, I think, probably longer than I would care to say on the show because she looks so young. I don't want to spoil that for people. So, but she has been in the mortgage industry long enough that she has lots of experience and has helped thousands of people find homes and also helped thousands of people find the way of making money to get homes. And she's also really awesome. I have worked with her, and I really think that she should give us some interesting insights. So thank you so much for being with us, Lori.
Wonderful. Thank you for having me here. I look forward to helping you guys out.
Thank you very much. So I guess the very first question is, was what my friend said something that you hear from people looking to buy a house? Like, $800,000 is a lot of money, and I feel like I make a decent amount of money, but I don't think I can afford to buy a house.
So, in order to be able to afford to buy a house, there's a number of different ways that you can pursue that. And there is no one answer that applies to every single potential buyer that's out there. So obviously the most effective approach is to try and have a one-on-one consultation with a lender, which is what I do, and discuss your situation and find out what options are available for you, because there'll be different options that are available to the person next door to you and different from the person 2 doors down. But there are a number of different financing programs available now. I think more now than ever in the history of this industry. And it just depends on finding the one that works for you the best. So for down payments, there's 3 different loan programs or loan categories. First one is called FHA, and that's a government insured mortgage. All the guidelines are dictated by the Housing and Urban Development, HUD, in Washington, D.C. And the reason I mentioned this program is because they have the very small down payment requirement of 3.5% of your purchase price. And it can be completely gifted to you from family. So if you have any family members that are willing to help you in buying a home, they can help by gifting you the money that you need for that down payment, which is, again, historically speaking, that's among the lowest of the down payments needed. Then that's one of the government financing programs. The other one is the VA, Veterans Administration, which requires no money down. And that's a really golden program, especially here in San Diego, because there are several veteran potential buyers that want to get into a house, but they don't have a giant lump sum of cash to use for their down payment. VA does not require any down payment. You can finance 100% as long as you're qualified. And qualifying is really determined by your income and your credit. And then the next option is looking at what we call DPA, or down payment assistance. And there are a number of different bond programs within the state of California that offer down payment assistance, DPA, in addition to the financing of the first mortgage, so that you can use that money to help come up with that down payment that you need. And that just kind of gives you an overview. Where do you want me to go next, Frantz?
Well, I think, I kind of want to talk a little bit about FHA loans because, VA loan requires that you be a veteran, obviously, or be married to a veteran, which in San Diego, it's actually very likely that you're going to find a veteran or you can find a veteran to marry. But, not everybody is a veteran or is married to a veteran. So I am curious about, so is FHA available to anybody who is otherwise interested in purchasing a home, or?
Yes, it's only for people who want to buy a home to live in. So it's got to be owner occupied. You cannot use FHA to purchase an investment property or a rental home. But I think that's not really, what we're talking about tonight anyway. FHA is a great program because it's designed for first-time home buyers, but you don't have to be a first-time home buyer. You could have owned a house before and sold it and no longer own it, and now you're looking for another way. Maybe you're in another city or you got transferred, and you're just looking for a way to get into a house that's much more expensive than what houses were, 2, 3, 5, 10 years ago. So they only require 3.5% down payment, and they do have some pretty sweet loan limits now. Used to be, when I started this business over 30 years ago, the FHA loans were really small, but they've now encouraged the pricing range that we're in. So on a single family home, you can take out an FHA loan all the way up to, I want to say it's $979. Again, less your 3.5% down payment.
Right.
But if you're looking at 700, 800, 900,000, you can use FHA to purchase that. The only differentiation is if you're looking at condominiums or townhomes. So a condo or townhome, which is a unit that's in a complex that has a homeowners association and a master, complex, that has to be FHA approved. And they do have a long list of properties that have been FHA approved, but not every single one out there is FHA approved.
Yeah, and that's if you want to live in downtown, for instance, that is actually very relevant because there's a lot of high rises in downtown, and you have to make sure that it is approved for FHA.
Yeah.
And when you talk about a loan limit, that really is the limit of the loan. It's not the limit of the value of the property.
Correct.
So that means that if you maybe have 4% instead of 3.5%, and your 4% is going to bring you down to the loan limit, you can still get an FHA loan, even if the property is worth more than the loan limit.
It just depends on what your contract price is there.
Exactly. Right. So contract price less money that you're actually coming up with is going to equal the or the loan amount, and the loan amount has to be less than the loan limit.
Right. And so for FHA, whatever your price is, they will finance up to 97%. No, 96.5% is the loan to value on an FHA first trustee. 96.5% because you have to be able to put up a down payment of 3.5%. And then there are some other options out there where you can look at down payment assistance
Right.
through some of the state and government bond programs.
And I am kind of curious about the down payment assistance program. So when I think about, the person that I was talking to, maybe an FHA loan is less realistic for them because maybe they don't have that amount, or maybe they don't make enough income that maybe they have the 3.5%, but then maybe they don't have the income to support, a mortgage payment on 3.5% of 800,000. So do down payment assistance programs like help make housing more affordable for people?
I don't know about more affordable, but more possible. Because if you don't have the amount of cash that you need to come in with a down payment, you've got to be able to come up with it somehow. Now, again, the number one benefit to FHA is if you have any family anywhere in the country that can help you out, and sometimes you can even pull from various aunt, uncle, cousin, sister, brother, mother, father, grandparents are really good donors. But yeah, so if you don't have that and you're just basically restricted by not having the cash you need, then the down payment assistance programs can be used in connection. It can be in connection with FHA, it can be in connection with VA, and then it can be in connection with a number of the different conventional loan programs as well.
And so, what exactly is a down payment assistance program? So, is it just like
So
hey, we're going to gift you money, or is it like,
yeah.
do they have different structures?
Yeah, and there's a lot of different ones that are out there, but in my opinion, there's some that are the best available, because many of the down payment assistance and the state bond programs have a lot of rules and limitations. So you've got to be within their income limits. San Diego has a San Diego Housing Commission that has a number of first-time buyer programs, and they do have some down payment assistance, but they have income limitations. So you cannot make more than what's called 80% of the AMI. And I can go through those numbers with you if you'd like.
So I am curious what AMI is.
It's the average income.
Yeah,
Like,
yeah, for the area.
but they have, let me get into my screen here. They have different ones available. I had it open a second ago. So here's a really good example. And CalHAFA is definitely the ones I've done the most of, because it's so flexible on the income limit. But here's an example. If you're using a CalHAFA loan, which is the California Housing Finance Authority, it's one of the state bond programs that are out there. You can use this, like I said, with FHA, with VA, with a conventional loan. Their down payment assistance, depending on your loan program, is going to be between 3 and 3.5%. And you can have income up to a maximum of $211,000 per year. So that is the most liberal of all of the programs that are out right now in terms of income limitations. Let me tell you about the San Diego Housing Commission. Get into that one. San Diego Housing Commission has a number of different financing programs for people who are looking to buy a home. Again, as you're owner occupied, it's not for investment property. But their income limitations are so much stronger. So let me give you an idea. Let's see here. If you are looking to purchase a home and you want to use the San Diego State, San Diego County Housing Authority, SDHC, and get one of their down payment assistance, you cannot make over what is called 80% of the AMI. Let me define AMI. It's the San Diego median income. So if you're one person to a family, your maximum income is $72,900. If they're two people, a husband and wife couple, your maximum incomes are, just moved my screen, 83,300. And then if you're three people, that's husband, wife, a child, can be 93,700. And if you're four-person family, husband, wife, kid, 104,000. And it keeps going. If you're 5 people, 6 people, 7 people, 8 people, but all of those people do need to live in the property.
And so that's kind of interesting. When you kind of mention these limits, it sounds like if you have a family or if you have more people, then it makes it, on the one hand, it makes the income limit higher, but obviously people like that are going to have more expenses because feeding 6 mouths costs less than feeding 2 mouths.
Yeah.
And I am kind of curious, when you're looking at like those income limits, then is it actually feasible, based on what somebody could qualify for somebody to purchase a home with those income limits?
There's going to be some sort of possibility for you to qualify for a loan if your income is 74,000 or if it's 85,000 or 86,000, but it's just not going to be maybe as much of a purchase price. But that's why I always kind of kick all the way back to the very start point of this. Your best interest is to have a one-on-one consultation with a legal qualified lender, which is what I do all the time. I'm on the phone all the time, every day, talking to people to go through what your income is, what your expenses are. Do you have a car payment? Do you have a student loan payment? Do you have credit cards? Do you have personal loans? Because those are also going to have an impact on how much you can qualify for. But once we get those 2 items of information from you, then we can start calculating exactly what your buying power is. So your question is, can you afford to buy a house if that's your income? Well, you can afford a particular loan amount. Now the question comes back to Frantz is, can I actually find a house in this loan amount or in this price amount? Because prices are kind of high over the last couple of years. But yes, there are times when we can do loans. It's just a matter of finding a comparable property that will go in that price range.
Right. And also kind of just like being realistic. If you can afford to buy a house that's say $700,000 or $800,000, you're probably not going to be moving to Rancho Santa Fe.
Right.
And if your dream is to live in Rancho Santa Fe, then that is probably not going to happen. But if your dream is to live somewhere that's not Rancho Santa Fe, there are definitely possibilities.
Yeah. And then that's just, we're talking about the San Diego Housing Commission, which they have the tightest income limitations. So they have great programs, but then when you have to be within that income limit and you can't make more than $75,000 or $86,000 a year, it's kind of like 1 step forward, 2 steps back, because you're not going to have that much buying power with that income, depending especially on what your other expenses are. Do you have car loans? Do you have student loans? Do you have credit cards? So that's why, in my opinion, I always point out to the CalHAFA program, because they have income limit at $211,000. And most of the first-time buyers out there or trying to get into their first home are usually within that income limit. Somewhere between 86,000 and 211,000. That's a huge spread. You got a lot more eligibility there.
Right. Right. And the CalHAFA program, I think you said, provides up to 3.5%.
They do have a down payment, a DPA, down payment assistance that goes between 3.5% and 3%. It just depends on if you're using FHA financing or if you're using conventional financing.
Oh, okay. So FHA financing would be 3.5%. And then afterwards, conventional financing would be 3%.
Not quite. Let
Okay.
me find that screen. I had it up in my computer and I can't find it now. Okay, so we need to find the. Oh, I know. Let me go online and find it. But what other questions do you have while I'm looking that up?
Oh, I mean, I was actually going to say, um, sort of now popping myself on the screen, is really kind of thinking about how important it is to have different experts and people who can advise you when you are thinking about doing something. So I think Lori, as Lori said, you spend a lot of time, or she spends a lot of time on the phone talking to people who want to buy houses and don't, know whether they can qualify for things. But I also think that a lot of times people aren't willing to have those conversations, and instead what they do is they hear one no, and then they decide, okay, well, this isn't going to happen, and maybe they don't talk to somebody who might be able to help them. And two, a lot of times, you know finding a person who is not only qualified and can help you, can tell you maybe no, but they can say no, and here's what you can do in the future to get you to that point. So
Getting
it's
a
really,
program.
yeah,
Yeah.
it's really important to kind of recognize that there are those lenders out there or people out there who are just like, nope, this is not possible. And then they don't really want to have a further conversation. And then there are people like Lori who are perfectly happy to say, no, and here's what you can do to put yourself in a better position. And, some of the clients that I've worked with you, we have done that where there was definitely a no, and here's what you need to do, and those clients actually did what they needed to do, and they were able to get to a place of owning a home.
And that's called setting up a plan of goals. First of all, I try not to ever say no to anybody. I will maybe say, not right this moment, and let's talk about what we have to plan over the next 6 months, 4 months, 8 months, whatever the case is, to get you into a position where you can do what you're trying to do. And I do that all the time. I've been doing this for over 30 years. So yeah, there's many clients over the history of my life in this career where we can't put them into what they want to get into when I first talk to them, but we set them up on a game plan and basically a history to follow. So it's going to be, like I said, 4 months, 6 months, 8 months, 12 months. And then we come up with a whole list of here's the items to work on. Would be minimizing your debt sometimes. It would be talking to the employer about changing the income. Could be coming up with a cosigner. There's so many different ways that you can change your qualification. And it's having the attitude of the person you're talking to, I think, willing to go through all of that with you. But yeah, I have several clients that we've worked over 6 months, over 12 months. I had one we worked with for 2.5 years before they were in the position that they wanted to be in to get the house they wanted to get. And they got it, they got into it. So if they don't give up, I won't give up. I'll always be following up with people saying, okay, here's, your 3 deeds that we're looking to accomplish. I have one right now where they've been employed for a number of years, but they went self-employed just last year. And lending guidelines specifically want to see 2 years history of being self-employed, and they barely have one. But when this year, 2022, is over with, they will then be meeting that 2-year requirement. They also have some issues going on their credit report, which I'm not going to go into details, but they have a little bit of work to do with that and talk to the individual creditors and get them resolved and straightened out on their credit report. And so we've come up with a 4-month plan because we started this last month. So we had 3 more months in this year and then 1 month at the beginning of next year to start working on getting your tax returns done. And they have a tax person, so they can start already setting up some game planning with them. But they are not in a position to get into a house today, but we are totally staying in touch every month on what's going on, what goals are you achieving? What else can we do? What else can we look at to do to have a good impact on you? And we've got a let's get back together date set for the end of January to talk about how are your tax returns looking? Let's now take the 2 years of income that you need. And I actually took this file and sent it over to our underwriting department to see if there was any way we could get away with the one less than 2 years, the 1 year. And because of a number of different things, some issues on the credit, not fantastic credit scores, not solid paperwork, they said, we just can't do this right now. But when they get the 2 years, we can definitely bring them back in and look at it. And I discussed that with him when I first met with him. I said, this may happen. Let's be prepared. Let's do everything we can to try and get it through right now. We did that. We couldn't get it through. So now we've got a 4-month plan. In 4 months, they should be in a much better position. And we'll be talking again about what can we get them pre-approved for, and not just qualified, but what can we actually get an approval for so they can go out and start looking at houses.
Yeah, which is really helpful. I mean, I am a huge believer in planning and making sure that people plan and go and really make the choices that they need to make to be in a good position to make whatever decisions they want to make. And so kind of to go back to one of the things that you mentioned family members. Like, what about those people who are like family and not actually family?
Are you talking about having them help you with cash?
Exactly. Like for FHA loans, having those people with cat or have cat or with a down payment or gifting money or whatever the case might be.
Well, and again, it depends on your program, because FHA loans have one rule. Conventional loans have a little bit of limitation on their rules. VA loans, totally different rules. So it totally depends on which direction you're trying to go in. To black and white, that's the guideline. The way it's written is they want the gift to be from a family member. So off the black and white, there's always ways that we can look at simplifying this information or maybe enhancing the information to get it to work for the program. And that's all I can say about that. But there's always a way to make something. You may have somebody who can give you a bunch of money, but they're a completely unacceptable donor. You can have them give that to your brother. The brother puts it in his account, and now the brother is giving you a donation. There's always a way to work around every single aspect out there. We've been doing it for years and years.
Right, exactly. And I mean, I think there's sort of a difference between, the actual guidelines and sort of figuring out how to meet them, which as a lawyer is something that I do all the time. It's like, okay, you've got the black and white letter and it must be this, but then what's a way to make this happen?
Right. And that's part of the game planning that I do with my clients. I sit down, I go through what they are eligible for now. If they're not eligible for what they want, then we come up with a game plan of however many months it's going to take, 3 months, 4 months, 6 months. And then we talk about those other objects, like where can you get gift funds? Who is the person? We need to make that fall into the guidelines. So let's talk about options for that. It's so many characteristics to getting pre-qualified. They always talk about get pre-qualified, but really I call it a consultation, because every single person that we talk to is going to have a completely different consultation and a completely different amount that they qualify for and a completely different game plan of what they need to achieve if it's going to be a few months or a year down the road. And so it's really important to talk to somebody who's willing to go through all those details with you. I do a lot of my meetings face-to-face. This last couple of years, that was tough. So we had to do them like maybe via Zoom or on the phone. But now we're back to meeting people in person, which I really like, because I always want to get to meet who I'm talking to and how I can help them.
That's true. And I think it's just sometimes a lot easier to have like actual physical paper. And I mean, if you've been doing this for over 30 years, clearly we are not the same age. I think that, but I still feel like physical paper is actually really important sometimes. And I think a lot of people over the pandemic have realized that in-person interaction is actually important. I think that before the pandemic, I think there were a lot of people, including kind of in my generation, who are like, oh, it's great, you can do all this stuff digitally, and you can like, meet people via video, or you can chat on, pick your favorite social media, and know what's going on with people. But I think that everybody kind of just took for granted that they were interacting with other human beings kind of on a day-to-day basis. And when we completely lost that, I think a lot of people started to realize, oh, we did need that.
Yeah. Yeah. It's kind of like, do you want to go to a personal dentist and have him look in your mouth at your teeth? Or do you want him to just say, go to an online dentist and have them say, send me a photo of your teeth and we'll figure something out? I mean, that's pretty easy conversation, I think. So it's the same thing when it pertains to your financial situation and your ability and other options that might be possible for you.
Yeah, and I think that sometimes looking at the paper, even on your end as a lender, kind of helps you see what's there. And maybe you might notice something that, I mean, definitely as a lawyer, this happens all the time. My clients bring me physical documents and they're like, oh, I brought this. I didn't think it was necessary, but like I brought it anyway because I just brought the whole file. And that is definitely something that I'm like, oh, that's actually really helpful. We can do something with this.
Yeah. And I have to say that really appeals to looking at real estate too, because so many people feel like they can look at homes over the internet online and just figure out whether or not they like something. And whatever the elevated pictures are that you see online, and the online real estate portals now have ways to really sensationalize their photos,
Right.
both good and bad. But you definitely get so much more accomplished when you go out in person. And I have to tell people that when I talk to them too about pre-qualifying. Maybe they're pre-qualified, now they just want to look on the computer. I'm like, no, you need to go out and pound some pavement. You need to walk the ground and go see these properties in person. Not only what they look like on the inside, the outside, but where they are. What does the street look like? What do the other houses look like? What does the neighborhood look like? Where are the shopping centers? Where are the schools? And you want to really get a feeling of what that looks like, not just what it says in the computer. So I always encourage people. And the other issue with talking to somebody up front is that so many people don't want to talk because they're afraid they don't have enough information or they don't know the information. And I tell them, how can you even know what the information is before you talk to a person? That's why we're here. We're here. I'm here. Frantz is here to talk to you about what possibilities are, what properties are, what your loan options are. And don't feel like you have to know the answers to every single question. I always go through with somebody on the phone. I explain to them what the questions are, and then I explain to them where they can go to get the information to answer the question. And then they're like, oh, I can do this. Wait a minute. I don't need to know. I don't expect people to know the answers off the top of their head. I give them steps to take, where to go, to look for, I don't take somebody's income just by talking to them over the phone. I say, go get your pay stub. Tell me what it says on your pay stub in this section. What does it say on your W-2? And, we just go through every aspect of qualifying for a loan, one piece at a time, one piece, one piece, one piece.
So. Which is real. I think it makes the process a lot less daunting, which is really, it's like, okay, I want $1 million. How do I get it? But it really happens one piece at a time. And, that is also the point that you made about actually looking at physical houses. I cannot tell you how many times people look at photos, and like, I do this professionally. I have probably looked at thousands of real estate photos, and I've not looked at thousands of houses, but I've looked probably at like over 100 houses. So I have a pretty good sense when I look at the photos what it's going to look like when I get there, just because I kind of know what are the enhancements, what are the tricks, or whatever. But I mean, I always tell my clients, like, I do this all the time. I have a pretty good sense of what what their house is going to look like based on the pictures that I see. But clients don't have that. They have not looked at thousands of real estate photos, and they have not looked at hundreds of houses. And this is actually especially true, like when you're coming from out of state, which is when you are most likely to be looking at photos. I can say for a fact that if I look at pictures of houses in New Jersey, for instance, I really won't have a good sense of what the house is going to look like
Right.
because I have not seen hundreds of houses in New Jersey. I've seen like two. But so that's important also, is really getting a sense of like, okay, what is everything like, and trusting somebody who has a pretty good intuitive sense. And there's been a lot of times when I've looked at photos and I tell my client, like, I'm pretty sure this layout is a little weird because of like the camera angles, and they did like this angle and you can see this part of the house in this photo and this other part of the house in this other photo, so that means that this is probably the layout, and that's weird. Yeah, but my clients just haven't done that.
Yeah. Yep. It's always so good to get a feel for the house, how it feels to you in person by going out and seeing it. But also, you may end up seeing other aspects of the house that are not in the pictures.
Right.
Maybe there's a bunch of room on the side of the house and you want to put some plant fields in there. Not fields, but, plant some
Planters.
strawberries or tomatoes or whatever. That's not going to necessarily show up in the photo that's on the line. Or maybe there's this situation of how the house is sitting in its lot. Maybe it's turned a little way. Maybe it's turned the other way. Maybe like my house, I don't have a driveway in my house. It's like you get out of the garage and you're in the street. There's nowhere to park in the driveway. That's something I had to accomplish, or not accomplish, but deal with, because I liked the house. I was like, okay, I guess I don't get a driveway. Oh, well.
Yeah, which I think is just something that that people really need to think about when they're, dealing with um, their purchase decisions, and also
Yeah.
especially like living. If you want to live in like a high rise, that's even more true, because it's not just the neighborhood and the area; it's also what is the building like, and like what are the amenities, and like where I live, there's a thing where there's like a key fob, and so the different button, like if depending on what floor you're on, you either like swipe your fob and press the button right away, or you swipe your fob and have to walk across the elevator to the other side of the elevator to hit your floor. And maybe that's something you would care about as somebody who lives in that building.
Yeah, definitely.
Yeah. Well, thank you. First of all, I also want to just say, do you have any other pieces of advice for people who might be interested or thinking about buying a house, but really are just kind of like, I can't afford this?
Yeah, my number one suggestion is finding out exactly what you can afford and how that is come up with. And are there other things that you can do to change that? And I don't think people can figure that out on their own if they're not doing loan origination every single day, for the last 30 plus years. And that stuff, that situation tends to change too. I mean, the way that we do loans now is not the same as how we did them 30 years ago. It's not the same as how we did them 20 years ago. It's not the same as 10 years ago. It's constantly getting determined what the guidelines are, what they allow, what they don't allow. I mean, we've been through some really crazy changes over the last 2 years when COVID came into place.
Right.
Really, really crazy changes. When it first came out, we had major market eruption. So, yeah, there's no way as an individual who's trying to think about buying a house but doesn't know where they stand and is afraid to go out and look or afraid to talk to anybody, they're just going to stay in that same place. I don't know where I stand. So talk to somebody who can help you figure out where you stand and what options are, and then what possibilities can make that improve or get higher or better, So, and it doesn't cost a single penny. I want to make sure you know that. And this is the same thing with talking to friends. If you're thinking about looking at homes, you want to talk to an expert that's all they look at on their computer. That's all they do is real estate transactions. They know how to negotiate them. They know how to close them. They know how to, counsel their prospective buyers or sellers. So I think I forgot what I was going to say, and I started saying that.
I feel like you were saying, talk to an expert.
Talk to an expert. Yeah, I was going to say there's no cost in going through a loan consultation. All of my consultations can start over the phone. They can go to in person if you want, but it doesn't cost you a penny. You don't have to provide any paperwork just to talk on the phone, but it's going to give you so much information of where you possibly could stand and how you could get into a better price range. And we can do that on the phone in a handful of minutes. 20 minutes I would say is safe. And then the longer we spend on the time on the phone, the more information I'm going to go into, more details, more options, more choices, more um, abilities to fluctuate. So, but it doesn't cost you a penny. You don't have to pay for anything, just to have a conversation.
Yeah, I think that's a really awesome way of ending. And I also want to say thank you so much for being on the show. I really appreciate it. It's also, I mean, it is time, and we had all of these wonderful technical difficulties, which is the joy of using technology, which were on my end. I will kind of fall on that sword. But I want to say, Lori, thank you so much. And I have to say that really love. Um, I really love just how clear and calm you are, and how you make everything feel sort of warm and fuzzy and safe and less scary.
Aw, thank you. That's because I'm so old. But no, thank you very much. And you too. I mean, your clients have adored working with you for their home purchases that I've worked with a few of them, and they're wonderful people. And people get so much more capable when they're given a little bit of information and attention, and that's what we do. But we've had some great transactions together. Your clients have been very, very happy because you really go full scale on giving them all the information that they need and helping them answer the questions that they have. So I enjoy working with you, and your
Ab-
clients enjoy working with you.
Absolutely. Well, thank you so much. And I want to say thank you for being here. And next week, I will be here with another real estate pro. Bye
All
bye.
right. Bye. Take care.
Bye.